Hello, friends. This is Rajat, the managing partner of Inurgent Advisory, and it's been quite a while since we connected last. And it is really a tough time these days with also US elections coming on the corner. So it is a very important day. We are on the last day of October, and we just have now 60 days remaining for this year to be over. So the next thing that we're going to see in the next coming week are the two important factors. One would be the US elections that are coming up, and the second are the auto numbers that are coming up for India. Now here in this brief session for around next 20-25 minutes, I would be covering upon the holistic view of the Indian as well as the global equity markets, and how are they going to be impacted by the US elections and some other factors per se. So if we see from the US markets point of view, S&P and also the Dow Jones had seen, or Nasdaq had seen, around 1.2 to 2.4% of the fall in the recent market, but that primarily had been due to the rising cases of the pandemic, and like the Dakota and also the inside areas in the US, due to which the fear in the US market is that again the lockdown would come. As far as if we see that in India, we don't see that happening, because India has no economic wherewithal, or you can say the war chest, to even continue with any of the lockdown. So that fear is no longer there. However, then the fear remains of the US elections. Now, how the US elections would matter to India, I will just cover in a few points. Every time, as far as the emerging markets are concerned, emerging markets constitute around 60% of the global GDP. Now, 60% of the global GDP, we talk about the emerging markets. And among emerging markets, it is always the Democrat president, the US president from the Democrats, that is always the choice. And here in this case, the Republican ones, that is the Trump that he had been representing, is obviously a sure no. So we may expect bidding coming on the board. While he comes on to the board, we see less of the volatility as far as the decisions by the executive or the president in the US makes. While that happens, there are three aspects or four aspects where we can see the impact happening globally. As far as the Turkey is concerned, we are going to see Turkey getting impacted with the sanctions, because Britain is quite against though the Turkey, because it is very close to Russia for that matter. So these are the a couple of other factors happening. As far as the Indian markets are concerned, what Indian markets have done is, Indian markets are on a short sell. So that means in futures, there are traders, there are institutions, FIIs who are already on a short sell. So short sell dal ke rakha hai. So that means the market would be correcting in a week's time. However, it should not be taken as ki, okay, there are short selling positions in the market at present, so therefore we should go and we should sell our positions also, or we should also go short. That is not the case, because if you do that, there is also a risk of you losing the money because of the two factors. Shorting a script or getting you can say bearish on the market is more costly, because more capital is at risk, more margin have to be kept into, and once it is a fear free falling knife, it is very less eminent to get even the money back. So when they are on a short sell position, they mean that they fear volatility into the market, and they expect market to fall down, because wherever the you can say the election results pan out. But these are not static. Once the market opens on Monday, then Tuesday, then Wednesday, the positions changes every minute, every second. It changes every 15 minutes. So depending upon how the US elections are panning out, the traders, the executors, arbitragers, and even if we that FIIs for that matter, would change their positions. So अगर उनको ये लगता है कि no, now the stability is there or the market is going to go up, they are already on a short sell, they will start covering their positions. Now once they start covering their positions, the market will see an upswing. If we see that as a perspective, the next question comes कि level कौन सी है stability की? We are seeing around 11,500 to 11,660 as the level. अगर वो maintain हो जाती है और वो मेंटेन हो जाती है अगले 4-5 दिन में, तो वहां से मार्केट विल बी रिकवरिंग बैक. देयर इज नो लुकिंग बैक एज फार एज दैट इज कंसर्न. जहां तक हम चाइना की बात करें, अगर ग्लोबल इकोनॉमी की भी बात करें, ठीक है, यूरोप में केसेस ज्यादा आ रहे हैं, वहां पे आ रहे हैं, बट देयर आर नंबर्स दैट हैव कम फ्रॉम चाइना, एंड द नंबर्स आर अराउंड 8 मंथ्स के जो फैक्ट्री आउटपुट है, दे आर कंसिस्टेंटली ऑन द राइज, एंड इवन द yuan इन द ग्लोबल मार्केट्स इज नाउ अप बाय 5%. So yuan is up 5%, and then the factory, these things are up. And obviously, if Biden uh, comes into the power, although the provisioning या जो आप कह सकते जो limitation है in terms of the trade limitation would not be eased out altogether, but yes, there will be less aggressiveness as far as the trade barriers or you can say against the US and the China are actually going on with their decisions against each other as far as the trades or imports or exports are concerned. So that way, that thing, the volatility will be lower, which will actually be beneficial for the global supply chain because the flow of goods, services, money would be better as what it had been earlier. Now, while we do that, as far as Indian markets are concerned, there is one more important factor that is going to come up: auto numbers. We are expecting in the first week of the November the auto numbers should be coming up, and if the auto numbers come up, we would know whether the auto industry finally is out of dumps or not, because as in around 2 months back in my one of my videos I told that it actually employs around 10 lakh of population. 10 lakh of Indians are very actively involved into it. Around 5 to 5 lakh had actually lost their jobs when the pandemic and recession had come. So auto numbers कैसे आते हैं उससे भी हमारा डिपेंड होगा कि कैसे आएगा. As far as the other things are concerned, ICICI Bank had given the fantabulous numbers. Reliance, obviously, Reliance Industries it is actually showering money, and not only from the investors part but also from the returns that have been generated by the Geo, which is a subsidiary to it. So while the two good news have come as such, auto numbers are things that you should be looking at. While we do that, अगर आप कहेंगे कि जो हम शॉर्ट, जो मैंने कहा था मार्केट में शॉर्ट्स की पोजीशन है कि फ्यूचर्स में शॉर्टिंग है, दैट मींस सारे को लग रहा है कि मंडे ट्यूसडे में मार्केट गिरेगा. इफ यू सी फ्रॉम द यस्टरडेज क्लोज, द निफ्टी इन द एसजीएक्स निफ्टी वाज एट अ हाई, इट वाज इन अ प्लस, इट वाज इन द ग्रीन, दैट हैड हैपेंड. बट इन इंडियन मार्केट्स एवरेज 3 मंथ का जो एवरेज होता है, द 3 मंथ का जो एवरेज होता है फ्यूचर्स मार्केट का, वो नेगेटिव है. वो अभी भी ज्यादा है. शॉर्ट्स आर मोर देन द लॉन्ग्स, एंड 11,500 to 11,600 is the limit that you need to take care of, because from there the reversal would happen. Now I am going to bust one of the myths. It's not myth, it's actually in the last 50 or 60 years there had been one of the mantra, investing mantra, that is investing in gold. हमें ये पता था कि जब भी वोलेटिलिटी आती है, देयर वुड बी इन्वेस्टिंग इन गोल्ड दैट इज यूज्ड एज अ हेज into the market. Now let me tell you one thing: gold hedging, which till now was considered as a safe haven when the volatility in the market was coming, but now even investing in golds and bonds actually have not factored the slump and given the returns to the clients. Now I will show you practically right now ki how the gold and bonds have actually failed in hedging the risk. So in the last 1 week when the markets were correcting, the traders were dumping up the stocks and they were investing the money in gold, and they were also trying to invest money in you can say that bonds, you can say long-term government bonds, to have the safe haven and have the higher yields. But the correlation had been totally different. So I will share with you the screen and show you how it happens. And say for example, let me share you with the screen here. Yeah. So if you see the screen here, there you can see there are actually the 3 graphs plotted. ये मैं आपको क्या दिखा रहा हूँ? मैं ये दिखा रहा हूँ कि भाई स्टॉक मार्केट नीचे आ रहा है तो चलो जी मैं गोल्ड म्यूचुअल फंड में शिफ्ट कर लेता हूँ, या मैं गोल्ड बाय कर लेता हूँ, गोल्ड मुझे रिटर्न देगा. That is what the logic is. The second logic is कि अगर हम गवर्नमेंट के फ्लोटिंग या लॉन्ग टर्म बॉन्ड्स में जाते हैं, जिसको ट्रेजरी बॉन्ड्स कहते हैं, अगर हम ट्रेजरी बॉन्ड्स में पैसा लगाएंगे, we will make money. So or we could be very better placed than what we talked about the stocks. Now here in this case, if you see, just a second, let me make it bigger for you. Yeah. So if you see this stock, now here there are actually the 3 graphs. See here we can see 3 graphs. One is red, one is green, and one is around yellow or orange, you can say. The red is actually the Sensex. तो रेड आपको सेंसेक्स है, वो बताएगा कि सेंसेक्स कितना ऊपर नीचे गया था. और उसी दौरान पे जो हरा वाला है, दैट इज अराउंड इंडियन सोवेरियन 10-year old बॉन्ड यील्ड. तो रेड वाला आपको सेंसेक्स का ग्राफ बताता है कि सेंसेक्स कितना ऊपर नीचे चल रहा है, और ग्रीन वाला आपको दिखाता है बॉन्ड्स कितने ऊपर नीचे चली हैं, और जो नीचे येलो और ऑरेंज है, दैट इज शोइंग अबाउट द गोल्ड, द ट्रेंड ऑफ गोल्ड. नो टेक्निकली क्या होना चाहिए? टेक्निकली ये होना चाहिए कि द स्टॉक्स हैव गॉन डाउन, तो gold and bond should go up, and if gold has gone up, the bond should go down. Now ये inversely proportional है, तभी हम कहते हैं कि भाई मार्केट टूट रहा है तो सोने ने मुझे रिटर्न दिया है. But if you see this graph here in the month of October, if you see, while the market is coming down, the Sensex is falling over last 5-10 days, 5-8 days. Here in this case, the yield on 10-year government treasury bonds is also coming. It was only in the last 1 day or 2 days that it has shown a slight upside. अगर हम गोल्ड देखते हैं, गोल्ड भी यहाँ काफी नीचे गिरा था, सो दैट मीन्स अगर सेंसेक्स गिर रहा है तो गोल्ड भी गिर रहा है. सो इसका मतलब ये हो जाता है, तो हेजिंग तो आपकी रही नहीं. सो दैट मीन्स द हेजिंग तो आपकी रही नहीं फिर. So when the hedging has not been there, how would you then take care of the portfolio by diversifying? हम बात यही कर रहे हैं ना कि अगर हम suppose if we are getting out of stocks and let's put money in gold and gold will make returns, it is a classic case. It is a classic case where gold has not given returns or gold is not giving returns in the recent past of 3 months 6 months. मैं आपको कोई 6 महीने पहले की स्टोरी नहीं बता रहा हूँ, या मैं आपको 2 साल पहले की स्टोरी नहीं बता रहा हूँ, मैं आपको पिछले 5 दिन की स्टोरी बता रहा हूँ. Because as a portfolio managers, when also we analyze the portfolio, we also look into the fact that okay, either the market is going up or going down, we need to rebalance the portfolio and we need to make the strategic allocations in certain stocks. But while we do that, we also have to analyze how the other commodity markets are going or how they are faring. So many times we do get queries from the clients ki, okay, we should go to the gold right now because it is a safe haven. Because now gold अगर इंडिया में देखेंगे आपका कहाँ 42-40 हजार था, वहां से बढ़ के आपका 52-54 आ गया, 54 से वापस 52-51,000 पे आ गया है, around 10 grams. But now if we see the yield, the market is falling, the gold is also falling. So actually तो आपकी hedging नहीं हुई ना. So actually there had been no hedging in it. So this is very imperative factor that you need to see while taking a prudent call, and for that you need to consult your financial advisor or an financial planner who would be able to actually guide you through the same and actually be able to make you take that prudent decision. So this is one of the things that I had been trying to say, that then this is actually the classic case. This is actually the classic case of gold and bonds not being able to hedge the portfolio completely. So friends, ये हमने काफी शॉर्ट में आपको बता दिया है कि how the Chinese market will be impacting और Indian numbers कौन कौन से आने वाले हैं apart from China, what other factors are going to impact Indian equity market. So that is actually your auto numbers. So with this, I would also like to present to you, we have got our this one, what do we say, that the magazine launch now, and the October edition is here for your kind perusal. So if I may say, this is deep pocket edition. So this is the deep pocket edition for our October magazine. So here if you see, the look and feel is much like what do we say, vintage. It is much like a vintage, and here the celebrity that we have taken is around Peter Lynch. So here the celebrity has been taken as Peter Lynch. So while we do that, just a second, let me show you one more thing. Yeah. Yeah. So here is the case. So this is Deep Pocket magazine that has been launched, and it is our online version that you are seeing live here. And here the celebrity for the month is around the Peter Lynch. The Peter Lynch had been one of the best, or you can say that top most mutual fund manager of all times. So like you say, the Sachin Tendulkar is the god of cricket. Here is Peter Lynch, who had been known as a god of mutual fund. His mutual fund had given around 20% annualized return year on year for straight 30 years in the history of US markets, which even he told that he would never be able to recreate that. And his investing style was very simple. So we have covered 3 principles, 3 rules of successful investing as a cover story of our magazine, and we are going to provide it to our clients free of cost. For the others it will be chargeable. Apart from that, from the affluent and HNI segment, when we manage money, if you see that we have curated very curious 3 and 4 articles. One is 3 successful rules of investing from Peter Lynch. who has been god of investing in mutual funds. Then we also have the lifestyle, which is called as the mindset. So lifestyle section में हमने mindset की बात की. What separates the rich and the poor? What has to be the line of thinking? How their way of thinking goes? What they prioritize in their life? So that has been covered between the rich and the poor. Then we have in the equity market, to time or not to time. That means to be or not to be. So we have seen cases. whereby people say कि okay market नीचे है हम buy करते हैं, ऊपर है buy करते हैं, they don't average out, they don't discipline out. While that has to be done at time, self treatment is too hazardous for every one of us. So therefore it is a crucial case where whether the timing should be done or not be done, what is the take of Charles Munger or Peter Lynch on that, we have covered in this article. These are very quick short 2-page articles, which won't take more than 50 of your seconds to read. But yes, next half an hour for you to analyze and understand what they actually mean. So while I say to you about it, then you have an Charles Munger on illiquidity and psychology of investing. So normally what we do, we have stocks and say suppose आज तो आप BSE NSE में stocks buy करते हैं sell करते हैं. If you just go 20-30 years back or 50 years back in your family, there if your family has a habit of stock investing, there would have been many stocks which would be in the form of the paper documents or the paper certificates. अभी भी काफी लोगों को वो paper certificates मिल रहे होंगे. But what would you have identified? You would have identified कि उसमें अगर कुछ stocks बहुत अच्छे थे, से जैसे HDFC हो गया, ICICI हो गया, कुछ हो गया, paper stocks पड़े हुए थे और हमें पता नहीं था, हमने 10-15 साल के बाद निकाला या 5-8 साल के बाद निकाला, तो देखा कि उसकी वैल्यू 50,000 थी, अब उसकी वैल्यू 10 लाख हो गई है, 5 लाख हो गई. So because it was not there available at your fingertip to buy or sell, it was not available on your fingertip to buy or sell, so it was just lying there. It was just like your real estate property. It was just like a real estate property that you were having. Similarly, on similar lines, you were also having these stocks as a paper certificates. Now, how illiquidity and your own human psychology plays its role, and how it affects your returns has been covered in it. And Charles Munger, who has been the partner of Warren Buffett, has a very inquisitive take on this, and that we have analyzed in this article for you. And apart from that, there is a model portfolio that we have put in. We had selected our own group of stocks, which we had recalibrated when the market had crashed in March 2020, and how it has performed month on month, that has been covered in this section. Now, if I may show you how the look and feel in the real term is, let me go you full scale. Just a second. Yeah, let me go you full scale. This one. Hmm. Just a second. System is giving some issues. So here is the case, and here you can see that page for your kind use. I believe there is some internet connections happening, some issue with the internet connection happening. So no issues with that. Sorry, friends, there had been issue with the network quite lately, so because of the intermittent internet connection, so I'm just figuring that out, and that has been now, I believe, taken care of. So here it is. Hmm. Yes. So this is the cover page of our magazine, and see how you can interact with it. So if you go on it, you can click on any of the respective articles. So therefore, it is whole interactive. So you can go to any of the articles. You can click here, and you directly go on to the title. So this is our cover page article. So that you have gone to. So this is our magazine, and you can also reach us from any of these icons directly. You can directly interact us from any of the icons, and from there we will be able to connect with you. You can message us, you can connect with us at any given point in time. So this is this. So friends, this was a lookout for our magazine that we had done, and apart from that, I am currently reading this book, which is called as Trader Week Methods of Wall Street Master. So it's purely about the option trading and the derivative trading we have been working. So it covers not only about option and trading, but also the theory of money. So if you see what analyst, what the analysts don't know can kill you. So there are one of the very curious articles that they have covered, and it is for every investor. It also covers about the basics of economics, and guys, this one book costs around 4,000 bucks. It's around 4,000 to 8,000 bucks, and it is a gem of a book for every wealth manager to read, and it's one of the very important books for every wealth manager to read, and it is having such an from the economic macroeconomic point of view, from the microeconomic point of view, from the technical analysis point of view, from the fundamental point of view, from the stocks, you can say the balance sheet, and also the working, the corporate governance, and many other factors that have been taken into consideration, and how an wealth manager should assess all the factors together, and then take it up from here. So friends, this was for today. I will be coming up more with you and interacting more with you in the coming times, and thank you so much for being with me, and have a great day. Thanks for investing. And yes, one disclaimer, whatever the companies in the stocks had been listed here or spoken about, these are only for the reference purposes, and it is should not be construed as the investment advice. The portfolio, the model portfolio that we have shown in our magazine, does not mean that you should directly look and buy into it, because many of these things depend upon your risk appetite and your horizon of investments, which is better once you take your asset allocation and risk profiling into consideration before you make a final call. Thank you so much, friends, and let's connect in the due course of time. Thank you so much.